Unveiling HealthSouth, the shocking $2.7 billion accounting scam. In the world of corporate finance, few scandals reverberate with the same intensity as the HealthSouth accounting fraud. This is a story about ambition, greed, and a staggering $2.7 billion fraud that shook the foundations of the healthcare industry. But beyond the sensational headlines lies a cautionary tale with lessons vital for investors and professionals alike. To understand why the HealthSouth scandal matters to you, especially if you're involved in investing or finance, it's crucial to recognize the broader implications. Corporate fraud doesn't just affect the perpetrators. It has far-reaching consequences on stock markets, investor confidence, and regulatory landscapes. The fraud at HealthSouth, a company founded in 1984, serves as a stark reminder of the vulnerabilities in corporate governance and internal controls. HealthSouth aimed to capture a significant share of the burgeoning outpatient rehabilitation market, eventually becoming a leader in the industry. By the late 1990s, the company had grown to boast more than 2,300 facilities and treated nearly 1 million patients daily, leading to reported revenues exceeding $3 billion by 2002. On the surface, HealthSouth exuded the image of a prosperous, forward-thinking company. However, behind the facade, all was not well. At the center of this scandal was Richard Scrushy, the founder and CEO of HealthSouth. Scrushy was known for his charismatic leadership and aggressive growth strategies. He even embraced the trend of using the internet to drive corporate business. However, his strategies came at a considerable cost, with demands for constant growth putting immense pressure on the company's financial results. This would ultimately lead Scrushy down a dangerous path. In the late 1990s and early 2000s, as competition intensified and the pressure on profitability grew, HealthSouth began to manipulate its earnings. The company employed a variety of accounting tricks to inflate profits, essentially creating a facade that hid its operational struggles. This included overstating asset values and capitalizing costs that should have been expensed. These actions created the impression of a consistently profitable company, leading to higher stock prices and significant personal financial gains for executives. The method used to perpetuate this fraud was known as earnings management. It's a legal, albeit ethically questionable practice often used by corporations to meet or exceed analysts' earnings expectations. However, HealthSouth crossed the line into illegal territory. By the time auditors began questioning the company's financial statements in 2002, HealthSouth had manipulated its earnings to the tune of an eye-watering $2.7 billion. To put this in perspective, $2.7 billion is a staggering amount. It's roughly equivalent to the annual budget of a small country. But it didn't just represent a financial loss. It symbolized the collective trust that investors and employees had placed in HealthSouth. It was a breach of that trust that had devastating consequences. The investigation into HealthSouth began in earnest after an anonymous tip led the FBI to scrutinize the company's financial practices. In March 2003, Richard Scrushy was indicted on 85 counts of fraud, conspiracy, and money laundering. The charges alone were alarming, but they were merely the beginning. As the investigation unfurled, it revealed methods of deceit that left investigators and analysts alike shocked. HealthSouth's financial misstatements came from extensive internal pressure to meet or beat market expectations. This culture of deceit meant executives had to find ways to fabricate financial data without drawing unwanted attention. It was this internal culture, along with the leadership of Richard Scrushy, that created a perfect storm for fraud. When healthcare analysts delved into HealthSouth's financials, they began to connect the dots. The company's reported revenues never quite aligned with industry benchmarks. For example, while the overall healthcare sector saw moderate growth, HealthSouth's growth figures seemed almost too good to be true. Analysts noticed inconsistencies, which raised suspicions. In an industry where profit margins ran thin, maintaining such inflated earnings wasn't just unlikely, it was nearly impossible. Despite these red flags, Scrushy managed to retain significant control over the board and marginalize dissenting opinions. He even went as far as to dismiss suggestions for greater transparency and accountability. This concentration of power in Scrushy's hands created a nerve-wracking environment, stifling dissent among executives and employees alike, all too fearful of the repercussions. In a further revelation, the Securities and Exchange Commission, or SEC, stepped in and charged HealthSouth with securities fraud. By this point, the company's stock price had plummeted from its peak of $30.82 in late 1999 to just a few dollars a share within weeks of the scandal breaking. Investors lost billions of dollars as shares continued to decline throughout 2003. The SEC noted that HealthSouth had overstated their earnings for several quarters, and it started a chain reaction that saw multiple executives resign, the company's credibility evaporate, and substantial layoffs ensue. The broader consequences extended beyond just the company. Thousands of employees lost their jobs, leading to significant socioeconomic fallout in regions where HealthSouth facilities were major employers. In total, it's estimated that the fallout from the scandal contributed to over 10,000 employees losing their jobs across the country. Lawmakers began to take notice. The HealthSouth scandal played a critical role in increasing legislative scrutiny regarding corporate governance and accounting standards. As the public began to grasp the true extent of the crisis, the call for reform grew louder, paving the way toward the Sarbanes-Oxley Act of 2002. Enacted in response to this and other scandals, Sarbanes-Oxley introduced a catalog of regulatory reforms designed to increase transparency and hold corporate executives accountable for the integrity of their financial statements. It mandated stricter disclosures from publicly traded companies and increased penalties for fraudulent financial activity. Scrushy's trial, which began in 2005, was another roller coaster, full of twists and turns. After a long and arduous legal battle, he was acquitted of criminal charges in 2005, but was later convicted of civil fraud charges in a federal court. This highlights a crucial facet of white-collar crime. Even when perpetrators seem to escape justice in criminal proceedings, civil actions can still ensnare them. In 2007, Scrushy was held liable for $2.5 billion in damages, demonstrating that the legal system has mechanisms to ensure accountability even when the criminal justice system falls short. But let's take a moment to step back and view the bigger picture. The HealthSouth scandal didn't occur in a vacuum. Rather, it reflects systemic issues present in corporate America and the healthcare industry. The ramifications of this case extend globally, illustrating the need for sound corporate governance, transparency, and accountability practices in firms worldwide. In the wake of the HealthSouth fraud, we saw a growing trend toward increased scrutiny on corporate financial practices. Investors began to demand enhanced oversight from boards and greater transparency in financial reporting, pressing for compliance with new regulations. Meanwhile, companies across various sectors reflected on their internal controls, establishing better checks and balances to prevent similar frauds from occurring. The potential damage to reputation, financial loss, and legal implications became driving factors behind corporate reforms. So what are the lessons we can take away from the HealthSouth fiasco, especially as we navigate an increasingly complex financial landscape? First, there's the importance of corporate governance and internal controls. Effective governance ensures that there are proper checks in place that can detect any aberrations in financial reporting before they become full-blown scandals. It's crucial for companies to cultivate a culture of accountability, where employees and management alike understand the ethical implications of their actions and feel empowered to report discrepancies. Second, transparency matters. Open communication of financial health fosters investor trust and confidence in the marketplace. When companies operate with transparency, they build a solid foundation of credibility with stakeholders. This credibility is invaluable when striving to maintain investor relations, attract capital, and ensure long-term stability. Finally, the need for vigilant investors is critical. As investors, being well-informed and demanding clarity in financial statements can protect individual and collective wealth. Investors must do their due diligence to scrutinize financial reports and question anything that seems amiss. In conclusion, the HealthSouth accounting scandal is more than just a financial fraud story. It's a wake-up call. It emphasizes the critical importance of integrity in corporate practices, regulatory vigilance, and informed investing. While the case of HealthSouth is now a historical marker pointing to the need for change, it continues to serve as a reminder. We must remain vigilant in the face of possible corporate misconduct. The lessons learned from such incidents resonate beyond the healthcare industry, rippling through the broader global economy, shaping how we approach corporate responsibility today and into the future. As we continue to witness corporate mergers and acquisitions in a continuously evolving financial landscape, let this serve as a pivotal lesson on the fundamental values of transparency, accountability, and ethical governance. The challenges faced in the HealthSouth saga are not exaggerated, and they remind us that behind every figure and statistic are real people affected by the consequences of corporate malpractice. It remains our collective responsibility to ensure that history does not repeat itself. If you found this story interesting, hit that like button and subscribe so we can keep making these videos. Tomorrow, we are diving into a story that is just as shocking. Tyco International, how a CEO stole $600 million. You will not want to miss it. I will see you there.